Hey everybody, it's Mark Yegi. Welcome to another weekly stock market update. I'm down in Florida and we just had this nasty hurricane last night, and now the skies are blue and it's just an absolutely gorgeous day. But I hope everybody is safe out there and healthy out there and got through this thing okay. I know it's going to inconvenience a lot of people in Florida right now, and I know it's going to inconvenience people over the next several months if you got those storm surges and on the west coast of Florida. So sorry to hear about all that stuff. The good news is that we are in a green market. So let's talk about that. My cash flow machine mastermind was fantastic. We went quick today because everybody is having such a great week, but you can see 4 green lights right there in a row. We are green right now. We're about we're going into our 3rd week of being green, which means that we're a little long in the tooth, but it also means that that we are still maybe have some room to run. And I'll show you why. Here's the NASDAQ. And if you look at what the NASDAQ is showing us, the NASDAQ has got, I drew all these lines here. There's the downtrend. It broke the downtrend last week, and now it's broken this little handle. This is kind of a handle on this V-shaped cup, and it broke to the upside. So things are looking good on the NASDAQ, and it's the lagging indicator of the 4 that I'm going to show you. And so that tells me that it wants to go to this 18,671, and I drew a little X up there. I think that's where it wants to go. So that's around, I think it's around the 19.1 level. So I think the NASDAQ has some room to run, and it's a beautiful uptrending chart right now so far. So keep an eye on that. On the other 3 indexes or indices, whichever word you want to use, the S&P 500, look at that beautiful uptrending chart at an all-time high. The Dow Jones Industrial Average, uptrending chart off its 50-day moving average on a hammer candle, all-time high. The New York Stock Exchange Composite, hammer candle off of 50-day moving average, all-time high. So 3 out of the 4 indexes are at all-time highs. You think they're going to make the QQQ come to them? Well, I think the QQQ has to kind of go to them, frankly. I don't think the QQQ is going to do it the other way, make all these other indexes come down. I think until the QQQ kind of catches up, I think we're still bull market-ish. I don't know. That's what my crystal ball says. But sometimes it's in the shop and I got to work on it. But the volatility index is pointing down. It's down at the 200-day moving average and looking like it wants to go lower. That means that people are happy that the Fed is lowering rates, and they're probably pouring more money into the markets. I could tell you, based on the Bitcoin markets this week, Bitcoin has hit like an intermediate high, over the last several weeks at 66,000. So things are moving nicely in assets. Gold is at an all-time high. Bitcoin's at an all-time high. Real estate's in good shape. And you're seeing volatility come down. Everything is kind of pointing to the market going up, right? They always say, don't fight the Fed. Well, the Fed is cutting. That means they're injecting money into the market overall. And that means there's more liquidity that drives assets up. So if you're in assets, good for you. Don't be afraid of being in assets right now, because that's the play. Apple. So I've drawn a bunch of lines all over the Apple. You'll see in 2 consolidations here. One is 196 to 237. The other one's one inside of it, 213 to 232. Well, to me, it looks like it tried to hit that 232.92 and break out. It couldn't do it. Came back down, hit the 21-day moving average, and now it's bouncing back up. And I think it's trying to build cause to run up to that 232 again and then run up to the 237. I've always said over the last several weeks, I think Apple is bullish. This is a bullish chart, and I think we're looking at 254 as a potential pausing area or target area. So Apple looks strong to me right now, and basically on everything else I said, Apple would be a bullish play. Nvidia, same thing. You're seeing kind of a volatility contraction from 140 down to 90, from 131 down to 100. So the volatility is decreasing. The ranges are decreasing, and I think that means that it's going to break this descending trend line down, and it's going to want to go to that 131, then the 136, and then maybe the 140. And now over the next few months, we might be looking at all-time highs in Nvidia, especially if the NASDAQ does what I think it may do. Tesla is very bullish right now. The stock has just been running up into that October 10th robo-taxi announcement event. It's going to be a big event. I don't know if it's a sell the news event or a buy the rumor event. Right now, it sure seems like a buy the rumor. Hopefully, those sell the news won't be happening too much there. But things are really lining up well for Tesla. If you've been in Tesla as long as I have, it's been a rough ride over the last couple of years. But you know, maybe now it'll do the opposite of this rough ride, and it'll make it a really fun, glorious ride. Amazon, nothing wrong with Amazon. It's looking like it wants to go to that 201 level and break out. That's a nice, strong bounce off the, you know, the 200-day moving average, which took a while, and now Amazon's going. JP Morgan looks like it's in an ABCD structure on the way up. So it needs a little strength up to the 225 level, but I have a feeling it's going to 251. I think that's a number, something like that. And so JP Morgan looks good. Alphabet, on the other hand, is making an ABC structure on the way down. 193 down to 148, and then it hit it. I think it's going to go to that 170.41 and see some resistance again there. I don't think it's going to break to the upside. Maybe it will, but to me, it looks like the trade is to the downside on Alphabet. I think there's a lot of competition coming in, antitrust issues that they have. And, you know, some of these play out over years, but I just don't see a lot of reasons to buy Google right now. So I wouldn't be buying it. Mara Holdings is a Bitcoin play. You could see this is in a short-term downtrend. I don't like it. And yes, it's trying to hold above its 50, but it's in a death cross. If you're going to pick a Bitcoin stock, you got to pick this guy's stock. Michael Saylor is running MicroStrategy, and he's doing some amazing things with financial engineering there. He is an engineer from MIT, and he's doing some cool stuff, and you can see it's evident on the chart. So that's your Bitcoin play if you don't want to hold Bitcoin assets in a cold wallet. On Semiconductor just does its thing. And you know, I talked about Taiwan Semi to some of my subscribers last week, and I said, I think Taiwan Semiconductor is breaking out. And you see that little red line that I drew, that's the breakout from the cup and handle pattern. And you can see on this weekly chart that it tried to break out and it couldn't handle the truth. So now it's coming back down, but it's coming down pretty softly, which tells me that there's another potential breakout happening right here where we are right now. And I think it's going to run up into that big line, that big horizontal red line on the top of that chart. And then that's going to be cause for it to break out higher, especially if NVIDIA is doing the same thing. So they're kind of in the same area. By the way, a couple of weeks ago, I talked about, you know, how I thought Super Microcomputer was a short, if anything. Don't be buying this, trying to pick it off the bottom. They're having accounting issues and legal issues now. And I talked about the dreaded H pattern. I think I actually made a video, put it on YouTube and Rumble and some other places, and gave it out to my subscribers. And I said, listen, there's a dreaded H pattern there. It broke down below its dreaded H pattern, sought out a new low at 382.80, and now it's making another dreaded H pattern. I put a red line at the bottom saying, look, the next play here, after it gets down through this 382.80, and I think there's a good probability that it's going to go down through that, it's heading for this 275. And I really think longer term, this stock has so many problems, it's going to 200. But shorts can be dangerous. So if you're going to be in a short, make sure you have some short protection in there so that if it bounces, you can get out without getting too hurt. But I think that's a short play. Listen, that's about it from me. It's a green market. I hope you're making lots of green. And I hope you get out and enjoy the weekend if you can. And I'll see you next week on the weekly stock market update. Thanks for joining me. And if you haven't subscribed to Insider Tips, which is my weekly newsletter for free, you should do it. It's free. Don't cost you nothing. Go to cashflowmachine.io/tips and then just sign up there, and we'll send you lots of these videos all in one. And then sometimes we make exclusive videos for you for those particular subscribers. But that's it for me. Have a great weekend. See you later.